Good morning, traders and investors. Welcome to the number one morning show to get you guys started for the market. Welcome to Pre-Market Prep. Let's take a look at what we'll talk about today. We got, of course, the overnight action. We'll get into the meme stock rug pull. How will the markets react to CPI? We'll take a look at all the estimates that you guys should be watching as the numbers hit the tape. We'll take a look at the Fed talk today. What should you watch out for out there? There's a couple of them going to be speaking after the CPI report. So I definitely think keep that in mind. Elon Musk selling here. We'll talk about that. Unity earnings, Roblox, Trade Desk, Plug Power, Wynn Resorts, and of course, we got Greg Harmon, founder of Dragonfly Capital Management, as our special guest today. Welcome to the show. Who's ready to get your pre-market prep started today?
Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, traders. Let's bring on Joel Elconin, Dennis Dick, and let's take a look into the overnight action. And are you guys ready? Because CPI. I think we've all been waiting for this day.
Breathe in that oxygen.
Woosah, getting ready for the action.
Someone got bullish at around between 3 and 3:15 a.m. Took us off the low, and now we're up 13.5 handles, 41.38, trading at the highs of the pre-market session. We know what we got to take out on the upside. Crude in the red by $1.56, 88.94. Got over 92 yesterday, back under 89. Gold still over 1,800, down $4. You know that may move off the CPI report. That's at 1808.20. Silver still in the 20 handle, down a couple pennies, 20.45. Bitcoin basically flat, up $65, 23,125. Ethereum futures, they're trading up a little over 1%, $18.50 at 1709.50. So let's say the street is leaning a little bit long this morning into the CPI number. Would that be a fair assessment of the trading action, Dennis?
I think that people are just jockeying here, and I would say they're not leaning long because we had a significant sell-off yesterday. So there's obviously some money managers that are saying, even if it comes in light, is it already priced in? I mean, that's the question. So is it like heads the market loses, tails the market loses? I think it's what the market was thinking yesterday. I'm not convinced. I think if we come in low eights, I think we're going to have a rally, a significant rally. If we were able to get a 7 handle on it, which I don't think that's going to happen, but if it happens, always setting up just scenario analysis here. If a 7 was on it, we would rip like 420. Think about 420. If it comes in with a 9 handle, or if it comes in any hot, Katie bar the door, they're going to hammer the market. So it's got to come in light to go higher. And it's got to come in significantly light to go significantly higher. In line, I would say no good, because the market wants to see if the Fed plan is working. If it comes with a 9, forget about it. Katie bar the door. We're going back down, maybe not to the lows, but we're going to get hammered. So that's the setup. That's the scenario. We're going to find out in 26 minutes who's right, who's wrong.
Definitely, you guys got to watch out for the estimates. So there's 3 estimates here to watch out for, right? CPI reports, and you're going to get, of course, the year-over-year number. That's the major number that is talked about. 8.7 estimate for that. Prior was 9.1. And then you get into your month-over-month numbers. So the overall month-over-month is a 0.2% increase estimate. Prior was 1.3. And then you get your core CPI, of course, that excludes energy and food. That month-over-month reading is estimated at 0.5 reading, and prior was 0.7. And so that's what we're going to be watching when we get the tape. It's going to hit at 8:30. So you guys be ready, and we'll definitely try to get them up as soon as possible. But like always, if you guys want to see them as it hits the tape, you guys can get Benzinga Pro. Get your 2-week trial. You don't even need a credit card.
All right, so let's get into it. There's a few things to talk about before we get to the CPI, and I'm going to start with Musk. I think we should start with the whole Musk saga because it just gets more and more interesting, it seems like, every day. And here we go. Musk, just out of the blue, selling shares of Tesla last night. So you see it hit there. You can see it at the bottom headline. Thanks for putting that up, Mitch. Elon Musk sold 7.92 million shares for $6.88 billion. You're like, why is he selling so much Tesla? Well, then he tweeted out. He says, and I don't have the tweet in front of me. Do you have the tweet in front of you?
Yeah,
Awesome.
it's up right there. So it was Musk replied in a recent question about would he sell, and he said yes. In the hopefully unlikely event that Twitter forces the deal to close and some equity partners don't come through, it's important to avoid an emergency sale of Tesla stock.
So interesting. All this is interesting. One, chips are being played. He's showing his hand that he's nervous, and he kind of thinks he might lose. That's showing his hand. Twitter trading up on this significantly because it's saying that, hey, Musk thinks he might lose. Up 3.9% here, 44. We know the 54.20 is still on the table, and it's going to be up to the courts to decide who's going to win, who's going to lose there, unless there's a settlement before, and that could be a possibility as well. I think he loses. I personally think he loses. He has a chance to do his due diligence. He signed a binding agreement. This is what we were saying back at 32.33. I'm like, just because, in that day when the stock tanked, just because Musk wants out doesn't mean he's out. And obviously, in hindsight, that was a huge buying opportunity because the stock's tacked on 12 points since those lows. He's sticking around for the last 10. I think there's a chance you get it. I think there's also a chance we settle like 50 or something, and he buys it and he's like reluctant, but save himself a little bit of money. I think there's also a chance that I don't think there's a chance he just gets to walk away for free though. I don't think that's happening. That this bot excuse is going to work. So in the event that he just has to pay a fine, Twitter would get hammered on that. So I mean, the risk reward sets up still 20 points downside, 10 points upside, but it looks to me like there's a high likelihood that the 10-point upside could happen. So it's 54.20. It's up 10. It'll be up $10 if obviously the takeover goes through. I think there's a possibility that the judge does make him take it over.
It could take a long time. I mean,
no, it's not, Joel. That's the whole thing because when's the court date? It's fairly soon.
It's September.
Does somebody have the date?
Yeah,
because Musk was trying to push it.
I'll pull it up right now.
He was trying to push and he couldn't push it. I think the date's fairly it's this year. No, it's not going to.
No, it's September. But do you think it's going to be like a 1 or 2 day trial?
No, but it's not going to be like a 2-month trial. They're going to look through it. They're going to go through it.
And if he loses, if he loses, he's going to appeal.
This isn't going to be years. This is only going to be months down the road. So this is not going to be years to take this to decide. Musk would have loved to have pushed it. He couldn't. He was trying to push it. He couldn't.
All right. The trial date is set to start October 17th in Delaware Chancery Court.
So you got a couple months. There it is. And our chat's all over it too. Thanks.
Who goes to Delaware?
Plasma.
But I don't know.
That's because the courts they're a little bit more favorable to Twitter's position. That's why they
see, Joel knows the insight there. I don't know that one.
I mean, it's all about headlines to this. It's drifting higher because Musk's showing his hand that he's nervous about it, or he wouldn't be selling Tesla stock. What is unbelievable to me is that Tesla is trading higher on this. So you would have thought that Tesla would be trading lower on this, but no, this market, just does funny things. Tesla up 17 points because Musk sold more shares. And I guess they're saying, okay, well, we were nervous about the share sale, but then you said, oh, just in the unlikely. Well, I don't think it's unlikely. I think it's likely. So I'm surprised Tesla's trading higher. And
that's a little bit.
If they do have to do this, if he does have to buy Twitter, Tesla stock going a lot lower because he's going to have to sell a lot more shares. And one, it's going to dilute him, meaning he's running SpaceX already. He's running, the Boring Company or whatever, he's running Tesla. Now he's going to run Twitter too. I mean, he's running himself thin. So none of this is good news for Tesla. So it's unbelievable. It's up 17 points. Again, today, CPI is the only thing that's going to matter. So, obviously it's going to move off the CPI report in 11 minutes. If there was no CPI report coming, I'd short Tesla here, in my opinion. But there's a CPI report coming, so I'm laying off just because of the CPI. But I think it's ridiculous that stock's trading.
It's well off its high. It went to 879. That would be early
It's
this
crazy
morning.
that's trading higher
Yeah.
to me. I don't get it at all. But you know what? This market does irrational things. This market is irrational. Sometimes you fight the irrationality of this market and you get punished for it. I was chasing the meme stock trade a little bit yesterday, even talking on the show saying I think those could open and then rally. Nope. They opened down and they hammered the meme stock trade all day. I got burned in a few of these things, which I've been burning these things before, just chasing them a little bit. Obviously, Bed Bath & Beyond was driving the bus, and it drove it right into the ground yesterday. AMC not getting hit nearly as bad, but getting hit a little bit. But the Bed Bath & Beyond was a significant sell-off from 1334 high the day before. It was actually trading even higher after hours. The complete rug pull yesterday. And obviously, trading up a little bit here this morning, but they pulled it back significantly. I mean, these are hot potatoes. You're trading these meme stocks. Eventually, they do the rug pull, and they're ugly when they have the rug pull. And there's a lot of them that got hit to the tune of 15, 20% yesterday after having pretty good, 3-4 day run.
Yeah, just going back to the Tesla, if you're looking at this, just do a reset from yesterday. And we had a big sell-off, 100-point sell-off nearly in the last 4 days. I'd keep an eye on. Now we're below yesterday's high. Of course, what will happen with the CPI could affect it, but I would keep an eye on 877.19. That was the high from yesterday, and got to hold the close. If we go, if it starts to turn around, people S&Ps turn around off the CPI number, keep an eye on that close as potential support. I mean, Dennis, those stocks, a lot of times with the meme stocks, they get it going today and they get it going in the pre-market pretty good. They bring people in, bring people in. And then, it's not like it was before where it had days of runs, right? Back in 21, it would not to be a 1 or 2, 1 day, 2 day phenomenon. It would go on for several days. So, you took your losses, you moved on. It's tough. And short
I had a rough
equally
day.
as tough.
It was one of my worst days yesterday of the year because I was playing, and I got stuck with the hot potato. And what do? When you're on the wrong side of it, you cut the losses and move on. I was out of all that stuff at 9:45, but the damage was done. Some of those things gapped down on me. I had Express, EXPR, because Bed Bath & Beyond, relationship guy I am, Bed Bath & Beyond the night before was trading up another 15%. So I'm like, okay, well, these stocks are going to go here again. And obviously, that follow through did not happen the next morning. S&Ps got hit, and then they just started smacking everything. So I got whacked a little bit there yesterday, but this is trading, right? You're not going to make money every single day. You're just trying to make money consistently over the course of the time. So it was a tough day for me yesterday chasing the meme stocks. Got what I deserved. Got hit a little bit.
Yeah, it was 5 days straight up on a lot of these. So a little pullback also is warranted too. It doesn't mean that they've given up completely, but definitely be careful with that down gap on BBY. I do see that down gap could get filled on the downside. Don't want to see people get caught in that.
Quietness. What's happening?
Well,
everyone's waiting for the CPI.
He was bringing up that BBB. I just wanted.
I was just trying to get you that. I mean, if you're looking for that gap fill, 829, takes it down to that area. But then, it's even thin on that day. Volume came off yesterday too, so it's gonna go back to just being, BBY trading, in a buck range, 10, 12 million shares.
Cutting the AC off, that kind of thing,
Yeah. I'll tell you, they carry a lot less stuff in the store. Like I go in there for my random thing, it's $12 and use my 20% off coupon and and move on. But
I mean, this Bed Bath & Beyond, that was, somebody just in the chat, I just missed who said it, but exactly right. I mean, you had the move up, the short squeeze from 5 to 8, and then you had the ridiculous blow off top yesterday or 2 days ago to 1334. They pulled the rug out from under it, so now the leak probably starts again. I mean, this, again, when you're playing these stocks, I was not in Bed Bath & Beyond, but I was playing obviously other meme stocks off of Bed Bath & Beyond. And was driving the bus, and they drove the bus right off. They drove the bus right off the cliff yesterday. So a lot of those meme stocks got hit pretty hard.
All right.
Is
now
it over? It's hard to say if it's over. It could have another wave. I mean,
could.
you know what's going to dictate again is CPI. If the CPI is hot, FOMO will happen everywhere. So if the CPI is light, FOMO will happen everywhere.
All right. Another thing to keep in mind is that AMC 8-day for their dividend, right? Maybe that comes into play again with AMC. But let's talk about what you should watch out for today on the Fed talk. After, of course, CPI data, Fed Reserve Bank of Chicago President Charles Evans is slated to speak at 11 a.m. Eastern. Keep that in mind. And also Minneapolis Fed President Neil Kashkari will talk on a panel of stagflation at the Aspen Economic Strategy Group. So just want to put that on your radar,
guys
because
talk
you will
all the
get some
time.
Fed
They
talk
talk too much.
after. Well, of course, the CPI report comes out. They need to come out and kind of get their say
And
in,
how
right?
and how do you, when they're talking, like, how does that affect your trading? Like, what are you waiting for a headline
Hawkish,
to lift the
dovish.
SPY?
Yeah,
or-
hawkish, dovish. And so let's say like this. Let's say if for some reason we come in line, then for some reason you'll hear, let's say if it was Charles Evans be like, well, we need to fight inflation harder. We need to raise rates harder. Well, that
So
could
you're gonna
definitely
go in.
shake
Okay.
it.
I mean,
So.
intraday trading is choppy and is
Mhm.
random enough. So, I mean, if you're good at trading those kind of headlines and lifting offers and hitting bids intraday when the algos are picking up, go ahead. But I mean, there's a lot we'll discuss, at the event coming up. I mean, there's a lot more opportunity in, off the opens, off the closes, the pre-market, the after hours, because there's a lot of algos getting that news too, and they could just
it's
whip
fast.
market around
Yeah, it's fast.
on no liquidity. I mean, so it's something to pay attention to.
That's what I'm just putting it out there.
Yep.
Trading off of is a whole nother game, but definitely just putting it out there so you guys know about it. Don't get caught by surprise. That's my goal there.
100%, Mitch. And it's totally like, I mean, people ignore headlines, and there's so many people out there on Twitter that say the people who, are reading the headlines end up delivering the newspaper, or whatever the hell that quote is. It's the stupidest quote ever. Because you know what? Even though the initial move happens off the algos and they've got the initial move, there's all kinds of subsequent moves that happen off these headlines. If you're ignoring headlines, you will struggle in this business. I'm not joking. Like if you're just saying, oh, I don't care about CPI. I don't care about CPI. I'm looking at chart. Oh, chart looks pretty. Head and shoulders. Oh, it looks pretty. Come on. The CPI dictates everything. I don't care what the chart looks like. It's going to matter at 8:30. All it's going to matter is that
price stomps everything.
It doesn't matter what the hell the chart looks like going into this. And the best technicians avoid the news. They don't trade them into the earnings. They don't trade them into the headlines. They're avoiding it. You'll see the SPY go this wide. You know why? Because they're virtually like, no, thank you. I'm not going to make a nice little 5-cent market and SPY come into this number and get picked off by every other algorithm. I'm going wide. So, I mean, this, thought process that you can just ignore headlines and be a successful trader, I don't agree with that whatsoever. And by all means, if you're doing it, you're pulling the magic off, congratulations. But I'm going to tell you, the best and the best technicians just go in those pockets where there's no news. So you can do it, but you've got to avoid all those headlines. So you have to know when they're happening so you can avoid them. So you can do it. So I should correct myself. You can make money ignoring headlines, but you got to know when those headlines are happening so you can avoid it. If you're just like, I don't even know what the CPI is and I don't care, and you're trading at 828 and you're trading through that and holding stocks through that, you could get just hammered on it. So you have to be cognizant to when the headlines are occurring to trade around them. I like trading the headlines. Like, I think there's moves. I think the initial algos sometimes screw it up, go the wrong way. There's money to be made there. And I still think, it's like a combo. You want to use technicals, you want to use news, but you absolutely need to know when the Fed, when there's Fed speak happening, because that's market moving information.
All right, let's
Dennis, you like to do it. You like to do it when there's less competition out there. Like you're not chasing headlines in the middle of the day. You're not.
Well,
even
there isn't as many,
desk.
Joel. The reason I trade after hours is because there isn't as many headlines. I like trading the headlines. I like trading the earnings. Not maybe the sympathy plays off of it. We're going to talk all about this stuff at our event next week. But I mean, there's so many different opportunities. In the middle of the day, there's no earnings releases. There's no new information. There might be some Fed speak, but CPI is going to happen at 8:30. There's not as much information, new market moving information intraday. The big pocket of information comes from 4 to 5. And that's why that's like the hour. That's my power hour right there.
Yeah, I like how you're mentioning there that you still have edge there also too with the algos, because they get it wrong sometimes. So
for sure they do.
I think that's an important thing to mention there.
And
we
again,
all looking for edge. So,
and we're not saying you should start, and just focus, but you can't ignore it. You can't just ignore every headline. I mean, you've got to know, if you want to ignore the headlines, you got to know when they're going to happen so you can ignore them, because you don't want to get run over. And the random headlines is how we all get run over. When a stock comes out like Micron and randomly lowers guidance out of the blue, or NVIDIA does it randomly out of the blue. I mean, these are market moving events that aren't scheduled, and that's where you can get run over, especially as a technical trader. But you got to scramble and you got to go fast. I mean, you're trading, and all of a sudden these chips look good, and then NVIDIA warns. I mean, you got to get out of that stuff as fast as you possibly can, because it's not like it's all just boom. It's repriced down to here. There's a fall. It takes time. The algos aren't as good as everybody thinks they are. I'll tell you that much. Citadel Virtue, kick ass, but they're market making algos. They're not sitting here, just trying to anticipate or trying to predict. They're making money because they're market making, and they're going wide, and they're using, and it's a different style. But there's, a lot of other algorithmic traders that aren't very good out there. And there's money to be made from their inefficiencies. I'll say that right now. There's money to be made off of the algos.
And the 7 to 8 a.m. is also a good time, for the market's adjusting. A lot of earnings, a lot of headlines coming out during that time. And also, I mean, believe it or not, if you're inclined to get up at if something happens in the middle of the night.
Nothing like the 4 a.m. traders.
At 4 a.m.
I can't do it anymore.
4 a.m.
There was a lot of money at 4 a.m. There's a lot of money still at 4 a.m., but I can't do it. It was aging me. Are they going to die at a very young age from getting up and trading at 4 a.m.?
But you will if the market gets hot again. Yeah, like COVID.
It's going to really take it to get hot or cold.
You go on the West Coast,
I haven't done it for a while.
You just don't sleep. You wait till 1 a.m. and you trade a little bit.
If I didn't have kids, I could do a lot more. But the kids wipe you out, man. You need your rest to deal with the kids.
All right, guys. Let's get into
one more thing before we get off this. Thinking about it in the chat. Great question. How do you trade when the volume's so thin? Must only be really big stocks. Exactly. I'm not trading like, some small cap stock that's like really
look for
wide.
liquidity.
Yeah, I'm trading, stocks that are still active. I mean, AMD still has an active market. You can still get in and out of that thing. NVIDIA is still active market. Microsoft, Apple. I trade the S&P. I pretty much stick inside. I will leave the S&P and trade some fun meme stocks and do some fun things. It's not my bread and butter. I trade the S&P. So, there's main 500 stocks.
Yep.
And there often is in the top 100. There's often a pretty decent market still after hours, but I'm not in there taking liquidity all the time too. Sometimes you're just looking and you're like, okay, well, NVIDIA warrants. Okay, I'm hammering AMD right now.
Exactly.
I mean, it's just pure sympathy. So the algos
also,
are on it, but they're not that great.
Also, you have different size for different stocks, right? You know what you can do. You know what you can wiggle in and out of.
For sure.
Yeah. Yep.
I mean, like a Ford.
You got to know
look at
your
Ford's
size
market right now. Look at Ford. 15.18 to 15.21. And, just to give you like a trade, I was long Ford coming into today. It's up 1% because it went ex dividend. And there's a high likelihood that it doesn't reprice it all the way down the pre-market. And getting paid for that. I've already sold my Ford. I sold it, I sold it a little bit further down, but already paid for that. Just holding it overnight. Captured the dividend, 15.19. It's just to close. I got a 15-cent dividend, so the just closed 15.04. And picking up that change. And I mean, the market in here is good. You're getting out of 5,000 shares of Ford at 8:23 in the morning within 1 cent. I mean, that's a decent market. So there is liquidity. I'm not saying we should all be pre-market after hours traders. You got to learn the learning curve. But I'm just saying in the hour before the market opens and the hour after the market opens, there's a lot of opportunities.
Always understand that there's different ways to play it. And I think Dennis does it best. You can see that he sticks to what he's good at also. So trying some new things if you're a new trader out there. Of course, always managing the risk first, but learning different strategies can definitely find you something that most people just don't even know the edge exists there. Let's go towards our earnings report. This is one that I have to give it to Dennis. He gave a little bit of a what is going on here when we got the Unity software proposal to hit. Unity software coming in at an EPS loss of 18 cents, beating the 21 loss estimate. Sales at 297 million, missing the 298.3 million estimate. They did lower guidance on Unity software for Q3 sales at 315 million on the low end, 335 million on the high end, and the estimate was set at 346.87 million.
It was the weirdest takeover offer there from AppLovin ever yesterday. Like, we were trying to make heads or tails of it. It's funny. I was listening to Faber's analysis after mine. It was like the same. It was like he was trying to like figure it out. It was so weird. It was so weird. Is this a real takeover offer? Is it like not? There's no way they were accepting it, or probably very little likelihood they were going to accept it. So the whole thing was just weird.
So remember,
but it does give you a little bit more confidence in a stock like this, though, like I was saying. And I think Unity held up better than a lot of other stocks yesterday. One, maybe it was going to report, but two, because there is interested parties here. So it shows, maybe there's another interested party that give a real offer, but it was a weird offer. So I still like Unity. I like the story behind it. We got to see what CPI does. It'd be a stock I'd be interested in buying on a pullback here. I don't have a position in it, but 4 minutes, we're going to get so much more information. Everything could change.
Yeah, let's. One thing that I wanted to add here is Iron Source, right, is stated to actually combine. They already have an offer placed here. They stated in their earnings statement that Unity received a non-binding hostile acquisition proposal from AppLovin, and we firmly believe that our proposal deal with Unity is clearly superior and will deliver greater value to the Unity and Iron Source shareholders. So keep that in mind. Iron Source is IS, if you haven't heard about that stock. So just wanted to put that so we know the full story with Unity there.
Yeah, Unity bottomed on the same day as Kathy back in May and had a nice rally. That when we were looking at it, we heard the 58.75 and we're like, well, it's not going to 58.75. And the conclusion was there's nothing out, sell, and never saw those pre-market levels. You got a ways to fall back on this one. I know if you're looking to buy the dip, you bounced off 30, got a little over 50. So you got some room on the downside here. If you're looking for pre-market low, looks like it comes in. Actually, that was an after hours low, 47.37. So that's still $2 away. If you're looking for potential support level here off the pre-market trading. What do we got here?
3 minutes. I'm leaving you guys. I hope to be back, but it's going to be wild. I'll probably be back about 8:50. I'm going to be gone for a bit here because it's going to be wild.
No worries.
I did go a little bit long into it, a little wee bit long into it. But
let's have some fun. What's your level? What do you say? What comes out year over year?
I think it's going to be 8.1. That's my guess. It's going to be light.
All
We're going to have
that's
a ripper right
that's
now
your spot.
But I might be wrong. This could do anything.
Okay.
So I placed a slightly long bet just for fun, not even like serious money.
Exactly.
Just for fun, because I kind of feel like it could be a decent number, but that's where we're at. I'm going to trade it.
Look at that. They're listed. Wow, when did we spike to 47? Holy macro.
I'm going to give the chat a couple more seconds here on the poll.
Look at the algos, man. They're heating up. 2 minutes to go. We just spiked to 41, 47.
All
man, right. We were talked about the algo jumpers like a minute before. Holy macro. They're let's go to the 1 minute chart. That gives you don't go to the 1 minute chart very often, but when you got a number like this, let's go to it. Let's make it full screen here. We know what the high close of the rebound is, and that's 41.56 and a quarter. The high of the rebound is way up at 41.88. So on the downside here, those are big numbers. They're wide. Oh, now change of heart here. Whoever jammed it to 47, they just lost 8 handles on that one. On the downside, your low from yesterday, Tuesday's low was out 41.13. The buy the dippers came in last night at 13.75. I told you around 3.15. So I'm actually going to make that more of a relevant level than last week's low, 48.50, because right now it's standing as a potential double bottom. So let's get ready for this, Mitch. Why don't you
Yeah,
get
I'll let
ready?
you know. We
Give
did
me
take a
give me the
poll.
exact countdown.
Yeah,
Give
I
me
got you. I got you. I'll
exact
get through
countdown.
those. As I did, we did take a poll from the chat, and we got 38% believing that it's coming in line. What is that in line? Let's talk a little bit about those numbers.
Okay.
So the expectation here, year over year, is 8.7 estimate. Prior 9.1. This is where the chat went, and they said 8.7. So in line.
It's light. It's light, at least on the first tick up. They're looking
We'll
light.
see it.
Big
We'll see
light.
it.
Whoa, baby. Katie bar the door. It's light. 41.88 was the high of the move. We just went to 41.92.
Remember, those algos are quick. Be careful.
They're quick. I mean, I hope it's out. At least someone with that first move was the right move. That pop up 41.88. Spoos moving just in chunks. Someone went 41.51 bid right away. They locked it up. You got the 41.92 print.
All right. Core
right now,
here.
41.88, folks.
Core
that
month
was the
over
high
month
of the move.
at 0.3. 0.3 versus 0.5. Prior was 0.7. So definitely coming in light there for month over month in the core here. That was an important one to focus on here. Here's those numbers. Trying to get the month over month overall and the year over year number here, but definitely month over month core CPI coming down to 0.3, 0.5 estimate here. Year over year at 8.5. I got it right on the dime, baby. Right on the dime. 8.7 was the estimate. Prior was 9.1. That was my estimate given yesterday on at the close, 8.5. So slightly off the inline number there. So I don't know how this is really going to kind of react. I mean, to tell you the truth,
see the reaction.
Right now it's up, but I mean, I don't never know really. We'll see what happens year over year here at 8.5. So seems like the chat wasn't too far off. I should have maybe put the 8.5 as one of the options, but just slightly off in line there.
Yeah, the pre-market trader. I mean, they were leaning long since I don't know if someone got the number or got the hint at 315. Now we're talking about that true 50% retracement here. I mean, I'll go with you. Core, it's 5.9 versus 6.1 estimate. The Fed's doing everything right. The strong jobs number last week, showed us that we're not sliding into the recession. I know I was chastised on the show a couple months ago by somebody when I talked about a possible soft landing here, but right now we're ripping, folks. We're going to be printing 4,200 pretty quickly. So they like the number. Let's go. Let's get off the 15-minute chart. 42.04 and a quarter. That was your May 31st high. We're getting right into that 50% area. Let's move this up and let's go look at some of the. I mean, the stocks got to be ripping with this too. Let's get rid of the 1 minute chart and
give you guys some insight there into the report. So it looks like gasoline offsetting the increases from shelter and food. So that's probably why we didn't get too far from the overall number of that 8.7. There was some increases in shelter and food increases. So, of course, those are rent prices there. But gasoline here trying to offset some of that. I just want to point out how gasoline went from in June, it was a 11.2 per seasonally adjusted change. And now it's at negative 7.7. So big change there in gasoline. That's what brought it down a little bit there. But of course, we did get some increases in services and shelter. So that's why it didn't come down further than that 8.5.
And I mean, we did this. I don't know how many times I did this drill with you guys and gals. I mean, look at crude compared to last month, right? When they took the reading. Look at your other commodities. That's what is the core prices, right? Corn coming down, wheat coming down, okay, copper coming down, right? You have backwardation in these in crude oil and these things because people are anticipating lower prices. Copper getting a little boost now, but overall from when it's down for $5. So there we go. as of right now, consolidation. It's 8 days of consolidation, Mitch. You talked about that, right? The
Yep.
consolidation right now being resolved to the upside.
Yeah.
Still keeping an eye on 41.88. We briefly touched that last week. So if you're looking to protect any kind of profits off this, and figure your 50% retracements on your stocks, and nice move. We haven't got to any before we bring Greg on this. Everything's. I'm looking at my screen. Everything's up. Bank America is trading up. Apple, keep an eye on your highs of the move. Everything is trading up here. So why don't we bring Greg on and get I got to bring Greg on because his email was really good for talking about what to talk about on the show today.
All right, so I'm going to go ahead and I'm going to pull down these numbers here. I'm going to try to keep them scrolling on the bottom. I'll fill it on out for us here. Let me take off the estimates here. Let's go ahead. Let's get into our interview today. We're going to bring on here Greg Harmon, founder of Dragonfly Capital Management. Welcome on, Greg. I know those CPI numbers definitely probably caught your tape. What happened there, and what's your first reaction?
Yeah, well, it seems like the first reaction of everyone is buy, buy, buy.
And
That most definitely is.
You were talking about sentiment, and I know you like to use a lot of technical indicators, but one thing you said you wanted to discuss was like the negative sentiment. I mean, do you think that has something to do with the strong upside reaction that just money managers miss the move off the bottom? We're hoping for a bad number. I'm gonna get in lower. I mean, I've heard so many people come on this show, so many people in our chat. We got to retest the low. We got to retest the low. I think if we test the low, there's nowhere to go. I mean, we get back down to 3,600. How much do you think the negative sentiment has played into the explosiveness of this rally?
Yeah, I think it's a huge thing, and the market in general does seem to think that because the Fed has had problems in engineering a soft landing in the past, that they will never be able to do it in the future. Not to say that I think that they will be able to engineer a soft landing, but we do see that sentiment, as I said, has been overwhelmingly bearish to levels that we haven't seen in 40, 50 years, and stayed there for such a long period of time that it really seems like there's no one that believes that there's any upside to this market, that this is just a false rally, a bear market rally, and that there's no way that we could be through the downturn here. What's odd to me about that is that we've seen as well that many of the indexes have hit key Fibonacci retracement levels, and that's where they've bounced from. And this is what we typically see. We see the Nasdaq recovering from a 61.8% retracement. We see the SPY recovering from a 38.2% retracement, and this is not. It shouldn't be surprising to people that these are levels that we've bounced from. The one thing that has held me back from getting full on bullish is the fact that even though the Nasdaq has made a higher high, the SPY hasn't done that yet. And with the move today, we're in that territory right now. If it can close in this area over 417.50.
Yeah, it is, and it's coming up on the 50%. And Q2. I mean, I think that if you want to relay the negative sentiment, I mean, everyone was waiting for bad Q2 reports, and some of them were good, some of them were overly rewarded. Right? They weren't that great of reports, but it just seemed like the market's climbing the wall. We're here, just going back, taking a look at the Q2 earnings reports. Moving ahead. I mean, do you think? Another thing, people had the bar too low, and once again, that the companies beat these expectations.
Yeah, expectations have been reset to lower levels. Interestingly, the expectations for S&P earnings for 2023 are still really positive for growth for the next year, which is a good thing. And was my friend, you guys know Lee Drogan, but Lee Drogan likes to say, you can't bet against the USA. The USA is going to win.
Oh, okay. Well, we'll keep that to the economy and to the markets, at least for now. But what about sectors? Is there anything that still you think is hasn't left? Obviously, everything is ripping here this morning, and it's hard to chase into this kind of market. Sometimes you should. Is there anything that was like on your radar here? Maybe not getting as big a lift, but still you think could set up with some good risk reward ratios?
Yeah, I think the one sector that's been lagging that maybe is what's creating all this negative sentiment is financials have been
Okay.
kind of lagging there. They're starting to turn around, but they're well behind other sectors in that move. If you look at say the weekly chart of the XLF, it bounced where it should off of its 200-week moving average. Just beyond a 38.2% retracement of the post-pandemic move. But it's had a reaction that's been much slower than other areas.
Now, one area that I've been watching is, of course, the oil trade, right? I mean, that's what got inflation down. At least that's what we're seeing also in the data. How do you feel about oil moving forward, Greg?
Yeah, it looks to me as if oil is at a key inflection point. If you look at USO on a weekly basis, it's down at support that has held it since March this year, late February, March this year, and it's actually looking like it's got the possibility of heading even lower. So I think if you see the USO crack down below 70, you might see a retracement down to like the 50 level, and that would be certainly ease the talk about inflation and ease the recessionary discussions in a lot of people's minds.
Now, we just recently got, the warning from Micron. We got a pre-announcement for NVIDIA. With this CPI result that we got, would this be kind of more of an opportunity now that we've got these on a discount?
Yeah, it's kind of interesting, right? It seems like the whole anything attached to gaming is what's having a real problem now too, right? So, and we had the big miss by Roblox yesterday, and after a small rebound there, NVIDIA has been the poster child for the gaming industry and the chips there. Microsoft has been kind of stalling in its move back higher, but so maybe the chip industry is something that will lag for a while. Maybe not surprising, given that it was leading for such a long time. But it seems to me as if it's less of a implosion in that area and more of a, well, maybe we just hang out here for a little bit instead of rocketing higher with the rest of the market.
What about retail? I mean, you've had some utter disasters taking out, some of the price actions, some of the meme stocks. Amazon, I mean, that's a small part of their business, but you look at something like Kohl's, I mean, scaping around the bottom here. Macy's, still due to report here. I mean, is it rallying, not rallying for a reason here, or is there anything on your radar in the retail sector?
Yeah, the stock that I've been watching most often in the retail sector is Dick's.
Okay.
And this one has been, for me at least, an indicator of what's going on in the demand side for retail. This one is rebounding, but it's kind of stalled as it hit its 200-day moving average, and it gives me a little bit of discomfort. But so maybe it keeps me out of that sector for a while. But I don't see that. Retail can stay down with consumer spending continuing, and if sentiment changes to the point where we believe that there's less of a likelihood of a recession happening.
And just one more sector, like the travel, leisure sector. The cruise lines have been down in the dumps here, getting a little bit of a boost. Anything in the travel, leisure. I know Disney is having a good move here off the low. I mean, I've never been a big investor in the airline stocks, but is there anything in travel and leisure sector on your radar?
There's nothing that sticks out to me at this point. I will be watching Disney. They report tonight to see what goes on there. I do think that you guys and I, we both live in the Midwest. We're not in these coastal communities that move around all the time. And I'll tell you from what I see, that there's no slowdown in terms of people going on vacation, people buying flights, people traveling, people getting hotels and going to Disneyland and all that stuff. There's no slowdown in this. So I think that this stuff is going to recover. And maybe it's with the Disney report tonight that this starts to move.
We will be all watching that Disney report tonight to see if they can shake, of course, the kind of negative outlook that Netflix has put on in the industry. We'll see what happens to their subscriber growth and if they're able to bounce back. Appreciate you coming on today, Greg Harmon, founder of Dragonfly Capital Management. We'll definitely have you back on, Greg.
Thanks for having me, guys.
All right. Thanks, Greg. We snuck into the 4,200 handle.
Dun, dun, dun. So what's up, Dennis?
Well, with the market that prices nothing in, we talked about, like, if it's light, I thought 8.5. I thought
that would be a little high.
I got it dead
but
on.
They don't price anything in. This market is just
line.
This market is just like, you could kind of read the writing on the wall. It was going to be light. Yet the market still ripped, roar, and rally on it. Now, does it hold? We're coming up to major technical resistance of 420. Lots to still be determined yet. This isn't a green light necessarily go, but the initial headline, excellent. I have been selling some stocks into it because it's a big move. Obviously, big, money already. If you had anything tech, it's 70 handles right there, boom, overnight from where we closed yesterday. So you take the money and run. Maybe an initial headline, we are coming to major resistance 420, but I mean, this is good news. It's good news that it's light for once. But again, I kind of thought it was going to be light. I think a lot of people thought it was going to be light. So I would have thought 8.5 versus
it wouldn't have been light enough. I know.
Well, I thought it would go up on it, but I didn't think it would rip like this. If it was 8.1 or a 7 on it, I thought we were seeing 420. 8.5 when we kissed 420, Joel, or on the S&P. I mean, that's impressive.
I think the focus was on the core number here at coming in at 0.3 versus 0.5. That's a little bit better than just the 0.2 reduction on the year over year. But we got to keep on watch now. I mean, really what brought this down, and you can see it in the report, a lot of it is the gasoline change, the oil change. Everything else was kind of still up. And so that's the only thing that is the slight concern. If oil prices do, for some reason, go rampant again towards the upside, what would happen to inflation? That's the question that I keep asking myself. And that's why I'm watching oil so much, because I think that that's really going to depend on what happens with inflation going into winter. Of course, now this leaves room for the Fed because it was just slightly off there, right? I mean, how are you thinking about interest rate hike rates for the Fed now?
I think they're still coming, but I don't think that's all of a sudden. If it was hot, they're like, are they going to meet in, emergency meeting in August to, raise again? I mean, that comes off the table, I think now. Mm-hmm. And now we start talking, when we think about September, that maybe they don't have to be as hawkish. So it's all good news for the market, but let's take it in stride here. We kind of thought with gasoline price, everything coming in, that it was going to be, a little bit light, 8.5. So good news. Good news for the market. 420, the major hurdle here now. Big hurdle for the market is to hold these gains. Yeah. Ugly day yesterday. Obviously, a lot of tech stocks got really smacked. I did buy a few tech stocks into that weakness to be long into this report because I kind of felt like it was going to be light. I tweeted out that I thought it was going to be light. I said on the show I thought it was going to be light. I'm getting rewarded for that call. The question is, do I just book the initial gain here on some of these moves, or do you stick around for a little bit longer? Like I said, I've booked some of the gains when we were just off the show there here, but still to be determined what I'm going to do with some of these other positions.
A lot of momentum now, and now all the people that were on the sidelines, waiting for the bad number. I mean, and we've heard this a couple times. A retest of the low. John Lynch mentioned that yesterday. The farther we get away from that low, and we're just tacking on another 75 handles, a lot of the big money, the manager, they got
They
now they
start
got to
chasing. They got to get back in there.
yeah. Like, what are we gonna do? We're not, like now 3,500. 700 handles away, 700 points away.
This is what I was worried about for the bear thesis. Like I said, if we didn't have the CPI imminent data coming that I thought was going to be light, I would have probably been bearish on this market. But yesterday, I was saying, like, I'm concerned from the bear thesis. It's why, I was starting to buy a few stocks ahead of it because I don't want to be out of stocks going into this report. You're like, why don't you go 100% if you think China's going to invade Taiwan?
Yeah.
This is why, Joel. This is why. Because we don't know anything. And that number I thought was going to come in light. And obviously, I don't know. I still think there's a big problem with China here. I think it's still an opportunity to sell stocks. I still think we're not going back to new all-time highs. But with that being said, I could see some money managers chasing here.
No, I mean, you really balanced your, because I don't know what it was a week and a half ago. I had you and Mitch off the cliff with with China and everything, and Pelosi, like the impact of her going over there and the negative sentiment, right? I mean, everyone was waiting for the fallout, and we didn't get it. And sometimes when you have expectations, you gotta temper them with what the market action is doing. It's not even that great of a number, but maybe the sentiment is finally turned, or it's peaked. Like, it's not coming down yet, but at least it stopped going up. But we did just kiss 4,200. We're hanging up there. Greg mentioned the bank stocks, Dennis, and I mean, if you want to talk about something that hasn't left the station yet, the financials. I've been pretty light in the financials overall, but is this a time to start looking? Bank of America, look at that long consolidation.
I was going to buy them yesterday too. I thought about JPMorgan even, because these have come back down, Joel. And I mean, that Bank of America is a nice looking chart too. It's a cup and handle. You like your pattern trades, and you start to resolve to the upside here. I mean, there's still the China concern.
Whoa! Is that technical?
What? Oh, cup and handle.
Oh yeah,
he'll pretty cup and handle.
He'll use cup and handle. We'll use, I know Pablo wants us to use all these different things. We'll use a cup and handle, a head and shoulders, a double bottom, a triple bottom. I mean, I don't know. You put up those charts with all those squiggly lines and everything. I don't know. I mean, there's just
200-day weekly.
I got a story for you. I just thought of this one. I don't think I've ever said it, but when I first started at Bright Trading, we had First Alert. Remember?
Yeah.
And it had patterns, and you could put patterns in the charts. Like, it would filter for like certain patterns. And I remember my first couple days there. Yeah, and obviously, I lost money in my first 6 months. My first few days there, I was putting all the patterns. I was trading all these patterns, and I was like, oh, this is how I do. Because you come retail, right? And you're like, oh yeah, technical analysis is the shiznit, Like, you're right there,
bro. Like,
yeah, you're right there. So you're like putting all these patterns in the filters, and it would spit me these out. I lost on everything on those patterns, man. None of that stuff worked. None of it worked for me. And then you know why I started making money?
Don't
Just
worry.
reading the book, reading the order flow.
Don't worry, Dennis. We're gonna get on that. We're gonna get on that. Don't worry. Once I get the CMT, I got you, Dennis. We'll have a chat.
Okay, you can be my technical analyst. We'll get rid of Joel, and then
I'll be the chart master. Joel will be the simple guy. Hey, you want complicated? You want simple? Some people like simple. Some simple works for people.
Simple works for me too. Simple is everything.
It works for some people. And
CPI light buy.
Always understand
what
simple works for you is so important. What works for you is so important. Do you like complicated? Do you like that quantitative approach? Are you looking for arbitrage? Are you a speculator? What do you like to doing is so important. Now, of course, Bank of America is going to be watched today. But what I'm thinking is an interesting trade is, what do we do with NVIDIA and Micron now?
It's hard to say. It's all about, can we get through 420? We're going to bump up against it here. Are we going to hold those gains? There's still a lot of questions to be answered. I thought the initial headline would get bought because the algos are just like that. Oh, it's light, we buy. That's how simplistic it is. Algorithmic trading has made Wall Street more simplistic. Now it's a whole new can of worms. I mean, we still have the wild card with China. We still have problems that they just warned yesterday. Typically, you sell stocks that just warned into strength. I own Micron in the long-term portfolio. I don't own Nvidia. I bought Micron. I'm down slightly in it at this point, but I'm probably sticking with it because I need some exposure to some stocks. I can't go, all out of everything, but I think there's a lot of questions to still be answered, and I think it's not going to be easy sledding. I don't think we're just rip roaring to 430, 440. Oh, the CPI was loud. Let's rally all month till the next meeting. I think China's still going to have a rug pull here. I think those worries are still there. I don't think the market has even considered that yet because it's the simplistic market that doesn't consider anything. People who think the market prices everything in, it prices nothing in. It couldn't even price this light CPI that everybody knew was going to be light. Kramer's been saying it for a week. Kramer knows. Everybody figured this was going to be light, but it priced in none of it. We go up anyways. So, that's where this market simplicity, just, anticipating, we'll talk about that in the swing trading course, like anticipating headlines, anticipating, and getting positioned right. There's big money in that too. Now that's making a call, but in some cases, this call was kind of easy. So take the easy money.
I think with the Micron and Nvidia, not going to drill down on all the individual numbers here, but I think you just have to respect that the high of when the day of the news that came out, and for Nvidia, that's 182.39. Like if you're playing this for a swing trade or you're looking for a target, use that, and if it can get it, it's still $5-6 away there. So if it gets back above that level, then yeah, why not? Let's go fill that gap, 186.66. Let's pull a Walmart. If that's what you're looking for in Nvidia and Micron. Keep an eye on that daily high, and Micron's a little bit closer because you had the news yesterday. 60.54 was your high from yesterday. Look where it went to on that pop in the pre-market, right off that, right to 60.55. So if they're just going to shrug these reports off, or the warnings off, like they did with the Walmart, then they're going to get back into that gap area and fill the gaps. So that's what I'm just a general outlook just for those two stocks.
All right. Should we go towards the trade desk? I know that some people are going to be watching that trade today. It did pop about 17% after hours. Let's take a look at those earnings that came in. Yeah, definitely CPI helping it out. And we were talking about this trade on At the Close yesterday. So if you were able to catch that, well, one of the things that we saw was PubM ripping into this number. Of course, Trade Desk reported after hours. So with that recent pump that we saw in Pubmatic, we were interested in Trade Desk. Was it going to push on the earnings? And boy, did it push. EPS coming in here at 20 cents in line, sales at 377 million, beating the 364.87 million estimate. And they did raise guidance here. Q3 sales to 385 million plus versus the 382.58 million estimate that was out there. So a raise. You saw good numbers come from Pubmatic. Now good numbers coming from the leader Trade Desk. It's something definitely to watch. And I'll give you guys one that didn't have the best earnings that also reported with Trade Desk, but could just go up because the industry getting the lift and some kind of investors' eyes, which is MGNI, Magnite.
So TTD, I'll just give you the 70 bucks on TTD.
Right
You're
here?
$4 away from there. I think there's major resistance up there. If I was long that, I'd ring the register in the 69 handle, take the money and run. This market is still take the money and run. This is not 2020. I do not think we're V-bottoming. I do not think we're going straight back up to 470 or 4,700 on the S&P. I don't think that's happening. So I still think we're at a take the money and run. You're approaching the 50% retracement. Yes, I say the market price is in nothing, but there is money managers that were positioned there, like even myself, and probably taking profits maybe into this when we open at 9:30. A lot of them still, believe it or not, aren't even at their desk yet because they don't come in till 9. They might come in early for the CPI, but I'm not joking. There's a lot of people who manage money that don't show up before 9 o'clock. So, this is why when the market opens at 9:30, that's sometimes you see the wicked reversals and stuff when you get the big money making bets. A lot of money managers don't even trade pre-market because they think it's just gambling. They want to wait till
too much
the market
size,
opens.
right?
Yeah,
Yep.
they got too big, so they don't want to move it around. So I think we've got to wait. It's a nice initial reaction. That's all it is. But you're bumping up against resistance. I think if you're buying now, I think you're chasing. I think the play was to buy ahead of it yesterday because I thought it was going to be light. I think you're taking profits into it, to be honest. But I think there could be some follow through though. So I'm not taking all the profits, just taking some.
All right.
This big bar right here, keep an eye on this one. This is a really important bar. It had a big down day. It got to 69.82 today. First things first, let's knock out that 66 out there. Someone's got a little iceberg there. I'd also be careful on this one. If you go, 66, 66 and a half, 67, and then come back down through that area. So as always, keeping an eye on the open. Seems to be some intraday support at 63, but I'd use that if I caught an early short as opposed to attempting along at that level.
House of Mouse, I want to talk. Disney reports tonight. It's still one of the biggest positions in the long-term portfolio. I'm going to be holding the majority of my Disney. Do I sell a little bit ahead of it? I don't know yet. We have to see what happens with this overall market. I'm going to hold the majority of it though. So if it is like I'm just nervous to go through the report, it would be a partial sell for me. But I'm probably going to hold the majority of it through the report. It has had a good run. I think if you're in it for a swing trade, I would take the money and run ahead of the time. Obviously, this has been a longer-term investment for me, so I'm in it from a different reason. But it's had a good run.
All right, traders, with this kind of recent, and I'm going to call it a bull market because now I think we're getting into that 20% from the bottom there. So if you want to find out maybe how to swing trade in this new bull market, come to the introduction to swing trading with pre-market prep, of course, hosted by Spencer Israel, Joel Elconin, Dennis Dick, Rob Friesen, and check out the trailer of what you will see there.
Are you tired of being sucked into momentum stocks just as the momentum turns the other way? Do you not have a big enough account or tired of the complexity for options trading? Well, join Pre-Market Prep's introduction to swing trading. This is going to get me fired up. Learn event-driven trading, seasonality, sympathy trading, and you can stay on top with optimal hedging strategies. So welcome back, Spencer Israel, from the market hiatus, and learn along with Tim as he hones his trading and investing skills. August 18th, 12 p.m. Eastern to 3 p.m. Eastern. You think you learn a lot every day listening to Pre-Market Prep? Learn how to become an investor that can survive the swings, ups and downs in this volatile environment.
Come and join, guys. Come check
Joel
that
just snuck away there.
Yeah, I felt bad. I'm trying to improve on the wrap up here, but
that's all right. I don't mind the late run. He's got to get to his other show, so I'm just sitting here and now trying to digest what I'm going to do next. So
yeah, it's an interesting.
What I'm
day
doing
today.
is taking some profits into this, but holding a little, maybe a little wee bit. But I'm nervous that this might not hold up. So I'm somewhat nervous. I think the initial move was predictable. Now it gets back to unpredictable again. And don't forget, China still, even though we're not doing our drills, there's still the wild card there. So there's still potential concerns here. It's not a green light to just buy everything here today, but it was a nice move off the initial number.
One thing I'm going to be watching today is I think that we have now some intraday action for some upside. Of course, you got to be careful with kind of some resistance playing into the overall market and a turnaround. But for me, I think the memes come back into play now with this. With this pop here, it's going to have people a little bit leaning on the bullish side. At least I feel towards the open. So I'm going to be actually watching some of these meme plays to see if we get a squeezing some of those shorts on out. And I know that some people probably were like yesterday, it was like, oh, now I'm going to go short these memes. They're going to come down. Well, the CPI data could have changed that up. So I'll keep these ones on my radar today. And we'll see what happens. Like always, come on over to the live trading. Dennis, you have a great one. We will see you later. I'm sure everybody will be paying attention also to your Twitter to see what you kind of mentioned throughout the day. If you guys don't have Dennis, follow him at Triple D Trader. Get him up. Let him know how you guys feel about him on pre-market prep, whether it be bullish or bearish, or maybe you like him or you don't like him. I'm sure that there's going to be opinions given out there on Twitter. Dennis, always, one thing that he doesn't do is hide away, transparent, lets you know what he thinks. And from there, everybody make their own investment decisions. Appreciate you coming on, Dennis.
Thanks, guys. Thanks, Mitch.
All right, I'm going to wrap on up and bring us over to live trading. Like always, we got Lord Ryan, Zunaid, and I'm excited to trade this market. A lot of action going on. We've been killing it on that show. Yes, I know Ryan and Zunaid were red yesterday, but we've had a really good 2 months. I mean, I've been on a nice green streak, not trying to ruin it. So let's get on over to the market action. Live trading coming on next. If you guys want to go ahead and join us, come on over. We have a great time. Not only is it about trading, but also some great entertainment. Hit the like before you get on out of here. Appreciate it if you guys can smash that on up. And this show is nothing without Dennis. I definitely would agree with that. It would be great you know, like always, to have Dennis on at the close, but sometimes we can't get him on there. I'll see you guys on over of live trading. Come on over. Do you guys want to trade something? Let's take a look.